Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for the soybean futures market for August 24th, 2023. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion, not a direct trade recommendation. But my contact information in the bottom right-hand corner of the screen there. Feel free to reach out if you do have more questions about how to turn these ideas we talk about in the beans today into trading strategies, or if you need executional services from a broker like myself, or just want to chat the markets. Got my number down there, 312-277-0110. Soybeans, higher highs and higher lows today on the new crop contract there. We're now solidly holding a retest or a test of the broken resistance that was the 18-day moving average, the 200-day moving average, and really stayed above the 100-day and the 55-day, the green and the blue lines there on this chart. As well as now, have a new upward sloping trend line against the lows from June 5th through the lows here on in the middle of August. To look out for that coming in around 1320 now. Again, after a day or so here, everything's going to be above this 18-day moving average at 1330. And while, it came back down and dipping below the 200-day moving average, I'm not reading too much into that. I'm more impressed that price has come and broken back above these levels, came back down in a very solid test after a gap up this week to start this week, back and fill price action into those moving averages now as support. It looks pretty good in terms of a technical setup for a move higher. Downward sloping trend line against the highs from those highs in July against the highs now from this week. It looks like we're about to break out of that trend line. So, if there's any notion that there's a head and shoulders pattern here, right? Left shoulder from June 21st, highs there at 1430. And change with the right neckline or right shoulder, forming here with the neckline down around $12.94, $13, call it. Right, it's there, it's developed, but we would need to get rejected here now from where the market has rallied to and then fall all the way back down. Is it possible? Sure. If the tour clears out and we get really great weather the next 2 weeks, the tour comes back with high pod counts, which they're all over the map, just like the corn. I think there's a lot more questions to be asked on how now this weather will turn out for soybeans. And I think what the weather forecasts are saying, and it's not necessarily the heat, but the heat doesn't help. It's that dryness. Rain makes grain. We are tapped out in terms of subsoil moisture content for all of the fields that I've seen through the tour. Those cracks through Iowa where we're seeing 240 yield corn, there's giant cracks. That doesn't bode well for the very high pod count that we got for beans in that area now, that if we stay dry, we won't fill out those pods because they're clearly, if you look at the soil, right, there isn't the moisture there without a good rain. With all that being said, though, it builds our, fundamentally bullish, bias as to why there's a narrative now for beans to potentially go higher. We've obviously seen decent export markets, and we think that will continue. But, technically here, we've been building, I think, into the long side that we've looked at week over week here on the daily chart and in that Strategy of the Week webinar. And links to sign up for the Strategy of the Week webinar in the comment section and information section of this video. Do feel free to join me for that. Every week we take a look at a bit more comprehensive hour-long video where we go over this, the soybean market and a lot more, updating every weekend where those 4-hour and daily trends are. This is the 4-hour chart that we look at in that weekly webinar as well. The bean chart we've been looking at here from the 1130 swing low to the 1435 highs, pulled back into this 50% retracement. It's 1282. We gapped lower 2 times in that decline. I'm going to pull some of the stuff off the chart so you can kind of see it here, then see what was behind it, and then we'll put those fibs up there. But as we declined here, we left 2 open gaps on the way down. The market found that support at 1282. We then began, basically 2 new trend lines. If we draw against either one of these lows through that low, we have trend lines now to watch for support on the way back down. We obviously nested and built against support against that trend line here, which came in around $13 after we made a low. Went up and filled that first open gap around 1330. Market consolidated and then broke out higher. Upon gapping higher at the start of this week, we went up and filled that other open gap up around 1382. So both those levels have now, closed on the chart, so to speak. And then we came all the way back down now to test this, basically range high from last week, now as support, old resistance at 1330. That was also, right, a rally up into the 50% retracement off of the highs from 1434 down to the 1281 low, or 82 low, whatever split in pennies there, literally. We gapped up and hit the 61.8 line of that decline. So that immediately calls up, whenever we move to a 61.8 line of any pole, in this case it's a, from high to low, we immediately draw up the 50% retracement from the low to the highs that broke that. And we expect what we refer to as, or I refer to as an ambush or 50% long, 1331 and 3/4, like clockwork, the market pulled back, held that level of support. Could argue it's trendline support as well, back into the old open gap and old resistance. I mean, just lots of technical reasons to think we could get a rally there. Market proved it to us again. 50% off the highs here doesn't hold today as resistance. You see it go through 1364 there. And then the market more or less into the close, into the middle of the day here, I should say, because we then rallied higher. We pulled back. I wouldn't say we made it all the way to that 50% in 1352, but heck, 1356, that's still a decent pullback off the highs. Hold support. We're going higher. I think we're in a breakout now of multiple degrees of trend, 15-minute, 4-hour, and even the daily when you consider that trend line against the highs. That old contract high at 1440 is probably within striking distance. And the question now remains, how high can beans go? Well, if we're not going to hit that 52 national average, and certainly the crop tour and the weather that we're seeing suggests that we might be lower than the 50.5 that the USDA has already told us. If demand keeps on the pace it is for new crop beans, and if there's a reason that we think that demand might increase, we do run the risk of running out of beans with a sub or even round 50 bushel an acre, balance sheet, right? That starts to drop to 49 or 48 here, national average. There's a reason that soybeans could get back to the prices that we were at last year. An old crop around this time, right? We were talking about it pressing to fit $14, $15. So can we get to $16 for Novi beans? I don't know if we were going to have that much excitement in this market, but certainly I think we have enough of a weather market to challenge contract highs at this point. And we have a technical market that is supporting a building of that into that trend right now. And I think we might be days away from seeing a real move here and a continuation higher. Now, again, we get a good rain, temperatures shift. The tour comes back saying that soybeans are going to be just the most amazing thing ever, crop ever, which again, even what podcasts come back here, there's still so many, there's still so much weather market here for the rest of our August to finish out this crop for this year that a lot of questions remain. But corn for the most part, right, is there and finished, and there is certainly or finishing, and there's certainly the idea that at least in my opinion, there's so much variance in the numbers I've seen through social media today. I'm really honing in on what that Iowa number is tonight. Minnesota's looking very, very challenging. So the end of this week could be interesting still with headlines coming out of the crop tour. But I think the bean market's starting to price in the weather now. And I'm keeping all my eyes on, resistance breaking, support holding, and the continuation of this uptrend that we see in soybeans. So, all right, well, if you want more information on the tour or day-to-day updates from our team over here at Zaner Ag Hedge, Ted Seifried, our chief market strategist, gives his daily insights in our Ag Hedge hotline. Head over to the links in the comment and information section of this video to check out and sign up to be a part of that daily call with Ted, who is actually out on tour right now on that eastern leg and reporting into our hotline every day with his findings. So if you want more information, head on over to that link, sign up for that hotline, and check it out for yourself. Have a great day, everybody. Still to come here today for those that have signed up is our Strategy of the Week webinar. So look out for that video from me here a little bit later here. But you can always get in touch with me over here at Zaner at 312-277-0110. You can find me on Twitter, Facebook, or shoot me an email at dhussey@zaner.com. Have a great day, everybody, and we will be back with you as price action develops.